Did you know that Africa's combined GDP is roughly $3 trillion? Today, we're diving into African economics, visualized. We're going beyond the headlines to uncover the complex layers of its economic history and present realities. With 54 sovereign states, Africa is a continent of immense diversity and potential. But its economic story is often misunderstood. Let's start with a snapshot of the present. While South Africa boasts the largest economy in nominal GDP, countries like Egypt, Algeria, Nigeria, Kenya, Ethiopia, Morocco, and Angola are also key players. In 2019, McKinsey estimated that services accounted for 56% of Africa's GDP and 39% of employment. However, half the workforce remains in agriculture, and service productivity lags behind other regions. To understand Africa's current economic landscape, we need to journey back in time. European colonialism fundamentally reshaped African economies, prioritizing export extraction over domestic industrialization. Think of cocoa, coffee, cotton, palm oil, and groundnuts. These became cash crops destined for European markets. Alongside agriculture, minerals like copper, gold, diamonds, and uranium were relentlessly extracted. This system relied on forced labor, migrant labor, and taxation policies that pushed Africans into wage labor and commodity production. The Berlin Conference of 1884 to 1885 formalized this partition, triggering the scramble for Africa, which redrew trade routes and fractured existing economic systems. But Africa wasn't a blank slate before colonialism. Advanced pre-colonial trade and fiscal systems thrived for centuries. Oxu minted coins as early as the 3rd century CE. The Mali Empire, under Mansa Musa, controlled trans-Saharan trade routes in the 14th century. Great Zimbabwe was a major center of regional commerce from the 11th to 15th centuries. And the Swahili city-states, including Kilwa, Mombasa, and Sofala, were integrated into Indian Ocean trade networks by the 10th century. West African states like Benin, Oyo, Asante, and Dahomey had sophisticated taxation, military, and market systems. Colonial railways illustrate another crucial point. They were primarily built to move minerals and cash crops from the interior to ports for export, not to connect African regions to each other. This is a key reason why many post-colonial states inherited economies with weak internal market connectivity. The expansion of cash crop production often came with coercion. In the Gold Coast, now Ghana, cocoa became a major export, but its growth relied on African farmers compelled into commercial production through hut taxes, poll taxes, and forced labor. The independence era, from the 1950s to the 1970s, saw many African states adopt state-led development models, including import substitution industrialization. However, the 1980s debt crisis and IMF World Bank structural adjustment programs forced liberalization, privatization, and fiscal austerity. While these reforms sometimes reduced inflation and deficits, they also weakened public investment, manufacturing, and social spending. Today, UNCTAD's Economic Development in Africa Report 2024 highlights several macroeconomic vulnerabilities: dependence on foreign markets, volatile commodity exports, high debt, and weak infrastructure. The report emphasizes interconnected risks across political instability, debt and inflation, demographic pressure, energy dependence, digital gaps, and climate vulnerability. It recommends stronger intra-African trade, infrastructure investment, fiscal reform, and diversification away from commodity dependence. One often overlooked aspect is Africa's history of financial crises. An Oxford-linked project covers 13 African countries from 1860 to 2014, revealing repeated banking crises, debt crises, inflation shocks, and systemic financial collapses, often linked to commodity swings and governance failures. The African Continental Free Trade Area, or AFCFTA, which entered into force in 2019, aims to create the world's largest free trade area by number of countries, with a market of more than 1.3 billion people and a combined GDP of roughly $3 trillion. This is an ambitious effort to boost intra-African trade and reduce dependence on external markets. It's important to remember that African economic history is not just a history of poverty. It's also a history of trade networks, empires, taxation, credit, monetary systems, labor migration, and state formation. The continent's resource wealth has often been a curse at the national level. Countries with oil, diamonds, copper, and uranium have frequently faced currency appreciation, corruption, conflict financing, and price shock exposure. Nigeria, Angola, Zambia, DR Congo, and Sierra Leone are stark examples. The informal economy is central, not marginal, in many African countries. It accounts for the majority of jobs, encompassing street trade, transport, home-based production, informal credit, and small cross-border commerce. Women have been and continue to be central to African commerce. They dominate large parts of informal trade, playing critical roles in food distribution, retail networks, savings systems, and local price setting. Their trading networks often predate colonial rule and have survived it. Colonialism structurally reshaped African economies, redirecting production toward exports to Europe, imported manufactures, and extractive revenue for colonial states. This created long-term effects, including dependence on a narrow export base, weak industrial ecosystems, transport networks designed for extraction, and borders that cut across older economic regions. Independence did not automatically mean economic sovereignty. Many new African states inherited narrow revenue bases, externally oriented trade structures, foreign-owned mining and plantation systems, and debt-dependent public finances. Political independence did not immediately change terms of trade, capital ownership, commodity pricing power, or control over global finance. The structural adjustment programs from the 1980s onward reduced state capacity in some sectors, limited industrial policy, increased user fees in health and education, and deepened vulnerability to external shocks. This period still shapes how many Africans think about the IMF, debt, foreign lenders, and the limits of liberalization. Despite long-standing challenges, Africa's economic weight is growing again because of population growth, urbanization, mineral demand, renewable energy transitions, and digital financial innovation. Africa contains major reserves of cobalt, manganese, platinum, chromium, gold, diamonds, uranium, and rare earth minerals, resources crucial for the future global economy. Africa's economic story is one of resilience, adaptation, and untapped potential. Understanding its complexities is crucial for building a more equitable and prosperous future for the continent and the world.